Welcome to Lock in Your Success. We are the company that creates strategies to build wealth. This webinar reviews real-time hypothetical trades each week while analyzing market conditions with adjustments. Questions are always welcomed, asked, and answered. Before we get started, we need to go over our disclosures. Locking Your Success LLC is not a broker-dealer or financial advisor. This presentation is for educational purposes only. This information is not an offer to buy, sell, or hold securities. You shall be fully responsible for any investment decision you make, and such decisions will be based solely on your evaluation of your financial circumstances, investment objectives, risk tolerance, and liquidity needs. Please visit cboe.com to find and review the options risk disclaimer prior to placing any trades. Also, please note that these are real-time but hypothetical computer-simulated trades and results. The trades are believed to be as accurately presented as possible, however, they are not guaranteed as to accuracy and therefore live results may vary. No representation is being made that any portfolio will or is likely to achieve profits or losses similar to those shown. Whew! Now that that's over, let's get to it. Here is your host, John Locke.
Good morning, everyone. Welcome to the Options Trading for Income weekly update for October 16th, 2015. If you're watching this on YouTube, listening via podcast, come on over, join our mailing list, get your free report, 7 Secrets to Becoming a Successful Trader, and sign up for this free weekly webinar. Also, you can check out our trading programs. We have the super simple spread trades, the M3, the Bearish Butterfly, the Rock, the M21, and of course, APM squared. In this update, we will cover 4 trades from our various systems. We have a Bearish Butterfly, we have an M3, we have a Rock, and a V Condor. We've been tracking these for years, and you can go ahead on our blog at lockingyoursuccess.com and see the past recordings where they have been posted. As far as for announcements this month, we said this before, and I'm just kind of reminding you, we are changing the structure a little bit. This seminar, this presentation here is going to be available to only community members, and you can sign up for that for free. It's just a basic membership. Just come on over and do that. This webinar series is actually going to be ending, and you will not receive any more invitations. So you can go ahead over to our site, and maybe I can just quickly show you that. If you go under lockingyoursuccess.com, you're going to want to go to freebies and more, Lock Options Community, go hit in here and sign up for a basic membership. And of course, if you're already a member of your Premium or Premium Plus, then you already have access to this page, the membership pages. Once you're over there, you can come on over here, over to the community. And let's see here, for some reason I lost the page. There we are. So you can come on over to the community here and go under, I'm trying to remember, weekly webinar over in the left corner, and you sign up for the new webinar series right here. So you can go ahead and do that, and that way you'll be able to attend this live here. All right, so moving forward, other announcements is I'm going to be at Options Tribe this Tuesday. We'll be talking about what it takes to become a successful trader long term. It'll be a fun presentation there. Also, check the blog for our Option View webinar we did last Friday with Option View, and it's posted on the blog right now, so anybody can just go in there and access it. You do not need to be a member. I just wanted that to be available to everybody because it's important for anybody who's actually trading using their software. Also, we have our Successful Options Trader of the Month webinar coming not this Tuesday, but next Tuesday, the 24th at 9 a.m., and that is going to be with Mike Schwartz. So he's had some fantastic returns over the last 3 years using a variation of the Bearish Butterfly, and make sure you don't want to miss that. All right, so let's move on and take a look at the markets. So the market in general continues to contradict my short-term opinions. If you remember initially, I've been actually following my long-term thoughts fairly well, but short-term it's been definitely contradicting them. If you remember, I was initially thinking the Russell was going to go to 1200 and turn around, which it did. But last week, I was looking at, we were at 1200, or we already hit 1200 and backed off a little bit. But I was looking at the SPX, and we were coming back into a support level there. I was looking at the NDX, where we had broken above resistance level, albeit under low volume, which tends to be a little bit unreliable, but in combination with the S&P testing support, it didn't seem like such a far-fetched that since it held support on that Friday, that the market was more likely to go up than go down. And that being the case, I was expecting or had the anticipation that the Russell may try and pull a little bit higher before it pulled back, or at least maybe run sideways as everything else bounced, which obviously didn't happen. What happened on Monday is we had a failure of the support level on the NDX, which essentially is the first sign, or let's put it this way, it's very bearish, right? The fact that it broke out it tends to be technically bullish. It broke under low volume, that's not so bullish. But when we solidly break back under our support level, that is pretty bearish, and therefore from there it wasn't much of a surprise that we came down into this level here, which is our next support level. Like I said, contradictory. Short-term wise, I've been having challenges. Long-term though, the market's doing pretty much what it should be doing here. So on the rut, we had basically the same thing, right? We had the 1200 hit almost exactly to the dollar and backed off. Now we're coming into support levels, short-term support levels again. They're not; these aren't long-term levels. We're coming into some short-term support levels in pretty much all the indices. We're a little above them still, so I wouldn't be surprised to see them come down a little bit more either way. But where we go from here is kind of up in the air. You know, from like I said, we're at this level. Do we run sideways? Do we go up and down? I really don't have an opinion at this point. There's nothing decisive technically saying whether this is going to continue and bounce higher or it's going to push down lower. So, but essentially that's what's been going on. And my thoughts are we're at wait and see. If we break these levels here, particularly 1140, very good chance we're coming back down to 1105. If we bounce here, then we're probably like going back up to 1200 again. So we'll have to see what happens there. So let's take a look at how our trades are doing, see if I can be a little bit more informative with that. Last week we had a November M3, and let me just back out to Monday here for a second. We had a pullback on Monday, 14 points, reasonably large, nothing too crazy. The position looked like this, right, and there were no adjustments. Very, very nice looking M3 trade. So we were able to hold this position through Tuesday and Wednesday, and on Thursday, we, with a relatively large down move after a couple of days of down moves, we ended up, let me go Thursday here. Notice we were near our profit targets on Tuesday as well, right? So it's possible that some people in this trade would have been over profit target and maybe even pulled this trade a little bit earlier in the week. That wasn't necessarily the case here. We were fairly close either Tuesday or Wednesday, but you know, I did not pull the trade off. So here we are Thursday, and the market's pulled down. We are 2 positive delta. Our analyzed graph looks like this. Right, definitely far back in the tent. Now, normally, we're going to do, well, no, I wouldn't even say normally per se, but a lot of times we might roll back the position here. But we are fairly close to expiration, and I'm not past my short strikes here. There are other moves that sometimes I prefer to do, which are within M3 concept, of course, that rather than doing a complete rollback, that are easier and may perform a little bit better. So what I ended up doing here is I believe I bought, or did I sell? Let's see. Oh, I'm sorry, I sold 10, 1150, 1180, 1200 butterflies. So I sold some butterflies to essentially roll back my short strikes and roll back my long strikes, and I'll show you the position that put us in here. Right, so now we're essentially in a broken wing butterfly at 1150, and our position looks like this. So we've corrected our delta. We're still positive delta. We've corrected our upside gamma trend problems, right? We don't have any problems if the market reverses. Nice safe position here. This also allows me, if the market continues down, which it did, to make a different type of a rollback adjustment. So let's take a look at what happened there. So if we go to the following day, again, the market dropped more, right? We're too positive delta for our position. We're actually below our short strikes again. And here's what our position looks like. So what we did here is we actually did a Condor order to roll back the lower side in some of these, essentially roll back the lower wing. So I sold I bought 10, 1090, 1100, 1140, 1150 verticals, and then I sold some other ones. So let's show you the move there. So you can see I took 10 of these 1150s, moved them to 1140. I took my 1100s, I rolled them to 1190. That actually created a problem where I had a bit of a gamma trend problem to the upside. To correct for that, I sold 3 1180, 1170 verticals and flattened myself out to just about my maximum delta here. But I have a reasonable upside risk now. Without doing these verticals, my upside looked really bad. In other words, I was in a really peaky or high gamma position here. Essentially, all that happens at this, all that needs to happen at this point is the market has to be flat for a day, and we'll probably be able to pop out of this pretty much near profit target. And of course, if it wiggles around, we'll pop out when it doesn't look like we're going to be doing any better. So here is what we have for a T-log, because I did have a request on that. And a lot of movements in the trade this month. We just had a lot of movements up and down. So it's been a fairly challenging month, but we are still doing quite all right. Okay, let me close the T-log. Unfortunately, I closed the, that's all right. Okay, everything looks good. All right, so here's we are in, and that is where we stand on our November M3 trade. Obviously, we have 3.5 days left, and you know, we'll see what the result is at the end of the week. Now, not too bad. The rock trade has been a little bit more challenging. So let's move to, I'm just going to move to Monday for a second. And we will push over to, yes.
Sorry to pop in.
That's okay.
We have a question. Can you show the November M3 T-log?
I already did.
Oh, sorry.
Okay. Thank you, though. Okay, great. So here we are in our rock trade. This is the way we're positioned as of last Monday morning's update. If you remember, this was started as an M3, and then it was shifted over to rock position with the assumption that the market is going to settle down, because that's the assumption behind the trade. You know, the market is grinding up. We outrun our M3 position. Generally, when the market goes up, volatility tends to contract, and going into a more Condor type of position is typically beneficial. So we make that assumption in the trade, and that usually happens. And the position gains its money, and we take our profits and we move on. Occasionally, however, the market reverses aggressively and we get pushed back, and that's what happened this week. So, you know, from a trader standpoint, that's kind of a pain in the neck, because now you have to go in, you have to back out of what you did, you have to get back into a more high volatile situation. From a standpoint of an educator, this is awesome, because this is one of the, this is going to be an awesome trade, because we're going to get to see all the positions, or almost all the positions within the rock system itself. We started out as an M3, we shift over to a rock trade, and now we're going to end up shifting back, which you'll see. And so we'll go ahead and do that. So here, we're almost fully entered in the rock trade. Our positive delta is a little bit too high. Nothing to be overly concerned about, but it is over limits. So we just come in here and we pull off these two butterflies up here. So if I come up with the 1230 butterflies, so I'll come up here, I pull those off, and I essentially go into a 2/3 entered rock trade, brings our delta down to something that's reasonable, and we're sitting in a position that looks like this. Still a very nice looking position. The market settles out. It would gain fairly quickly. Moving forward here, we'll go to Tuesday. We actually had an up move, and we're up about 10%. I probably wouldn't leave at this point. There's really no reason to, but I am noting that we're up 10%. We go the next day, Wednesday, right? The market pulls back about 7 points, and let me undo the adjustment here. And I'm well over my maximum delta to the downside. I'm also over 10%. Now, one of the interesting things with a rock trade is this is a 20% profit target trade if we are in rock position. It is not a 20% trade if we're in M3 position or one of the other variances. So if I'm in if I convert over to a rock trade, I'm up over 10%, and I have to kick back into something that's designed to deal with more volatility, and I'm over 10%, typically I'm going to exit the trade. I'm going to leave, because as you know, we went into rock trade, we made certain assumptions. Those assumptions didn't work out. Things are starting to break up. Not a bad idea to go ahead and exit. But that being the case, again, we want to look at this from an educational perspective. We are going to stay in and move on. So what I did here, instead of exiting, is I rolled back into cat position. And you know, one of the reasons, again, I wanted to stay in is because we don't see cat position very often. It's actually fairly rare to be in this position, and it's good to just have an example of how to handle it and deal with it. So here we are if we roll back. This is still a really nice trade. If I had to roll back into cat position here and there was no way that I could really make any more money, then that's an indication to exit the trade. But here I roll back in the cat position. I still have the ability to make a little bit more, possibly hit my profit target, especially if the market moves around a little bit. So that is, you know, that's where we ended up. Unfortunately, we had a huge down move on Thursday. So let me move to Thursday, and we'll take off our adjustments here. Okay, so now we're positive 189 delta. Of course, we lost some profits because we're so close to expiration and we got a fairly large move, right? So here is what our position looks like here. We are now in cat trade. So typically what we're going to do here, if you're following the regular standard guidelines, is we're going to roll back these 1150s into 1130, and we're going to enter what we call M3R position, where we're going to roll this back, we're going to drop out of some of these upper butterflies, and we're going to add a deep in the money call to create something that looks like an M3. So that's what we did here. We sold off 5 of these 1210s. We rolled this back to 1130. I added a call here at 1110. When I did that, I had very low vega, and I was also negative delta, which I don't necessarily want to be. So I came in here and we did 5, 1130, 1150 verticals, and 5, 1140, 1150 verticals, and we ended up in a position that looks like this. Right, so this is essentially an M3R position. In this position here, I only would like to see a 10% profit and move on. I don't want to get any more than, I don't want to be in here generally any longer than that. But anyway, that is the position there. And if we go to Friday, I do not believe there was a need to do anything Friday. So let's take a look here. All right, we dropped another 6 on Friday. We are okay delta-wise. We're okay gain-loss-wise. Here's our position on Friday. So no adjustments there. And I will show you the T-log on that because I'm sure I will get a request for the second half of this. Right, so this is from all the movements made this week. Okay. I have a question. Yes, I had to go through all the rock positions as I rolled back, but as I did delta test each point, it's still indicating low volatility, which was puzzling because other indicators showed volatility was going up. Right, so here's the thing with that. You are going to show low volatility because you're so close to expiration. So anytime you do a 50-point butterfly that's within 10 days to expiration, I mean, the market would have to be insane to put you in a high volatility position. Realistically, when you're close to expiration, even if the market tends to be volatile, you're gonna need to be in a high gamma position to make your money and get out anyway. But yeah, you won't be put into a high volatility move, 7, 8, 9, 10 days to expiration. So that makes perfect sense. All right, so let's move on. That was the rock trade, and again, this is a fantastic educational, fun trade to go over here, and we're going to use this as an example probably in the future. So it's nice when we can do this. We had another one of these earlier in the year where the same thing happened. We happened to pop into rock trade right at the top of a resistance level in a choppy market, right? Which is something that you might want to consider if you're going to be pushing into a rock trade. Is if it's really a choppy market and you can see it in the charts and you know that we're getting very large price fluctuations, you might say, hey, you know what, I might just want to ride this out as an M3 and not bother going into a more aggressive position. Okay. My rock position is okay at the moment, but price is near the short strike of 1140, so gamma trend is shaky to the downside. Did you just say I shouldn't transition to rock in the last 10 days before expiration? No, I did not say that. It's fine to transition into rock. As a matter of fact, most of the time you're going to be doing it 10 days to expiration. I'm just saying you will not get a high volatility reading out of a butterfly when we do our entry test 10 days to expiration. That's all. Okay, so good. That's that. So what else do we have on here? We have the bearish butterfly is already closed. That did fairly well. We have V Condor. So let's take a look at that. This V Condor, we don't have to go back in time because we had no adjustments. If you remember, this was the position we were sitting in, and it continues to be the position we're in. This is just going to expire at a profit of approximately, 13.32, unless something absolutely crazy happens in the market, in which case we might make more money. But I wouldn't expect that to happen. So let me just back this out so you know what the whole position looks like. Right, so here's what the whole position looks like here. Not much danger of taking a loss here. So looks like it's a profitable trade. Again, we're not making a lot of money because the market just keeps reverting back to right to the middle of the Condor, which is problematic from getting a high profit standpoint, but it's generally not going to lose. So it could, but not usually. So here is that's the way we sit now. And let's see what else. We have a December M3. So let's take a look at that. Our December M3 actually had no movements in it until Friday. So if we go to prior to adjustment, we're just slightly over our maximum delta here. We are slightly below our short strikes. It's really kind of a borderline call here for an adjustment, but since it did hit the trigger technically by our trigger point, I did roll this back. So if you look here, I rolled this all the way back to 1120, and then in order to keep our delta positive, I needed to do 10, 1120, 1130 verticals, went into a position that looks like this. So still a very nice looking M3 trade, and we'll see where that goes going forward. Now we have the other things we have open is a December bearish butterfly. Of course, it loves this type of price movement, and there really are no issues here. We are slightly positive delta because of the extent of the pullback and the fact I believe we did a delta theta roll in here. So we added and rolled. So not going to withstand as much of a pullback as if you followed like the rules and ignored the delta theta rule near a resistance point. But if you're following the regular guidelines, this is where we sit. Take an analyzed graph, looks like that. Let's make this a little bit more appropriately sized. All right, so this is looking really nice. And again, no adjustment points here until we get down into the 1130 level, or right around 1130, and this looks good. And that is the bearish butterfly. Just a question is, can I refresh on the delta theta rule? Basically, 1.5 to 1 delta theta ratio. We are usually going to do a roll. We're going to roll up when we add, and that's what happened here. We rolled up, and we added, and we had more than 1.5 to 1 delta theta. Again, that's a guideline that's in there designed to keep you more on top of the market when volatility is low. Right, if you're taking technical into your trading, you might say, well, yes, volatility is low, but I'm overextended into a resistance area. Maybe I don't want to do that. But generally, doing this in low volatility is going to be beneficial more often than not. So that's why we do it. And when did oh, okay, so let's look at the T-log here. We added those 11.2. So our first adjustment was 11.2. So if we go back to 11, then we did something, then we maybe did the roll on 11.6. So let's go back to 11.2. All right, these were added on 11.2 when the market exceeded 11.80. Came in there and did that. Actually, we're kind of borderline. Let's see, we add 125 to that. We're actually maybe even over delta theta at this point. But like I said, I don't always jump on top of it. And you don't need to. You don't need to. But we go the following day. The funny thing when you're trading, one of the good things about this is you're adding on a day when the market's up a lot. They're very, very cheap. So it's a good day to add, but just because it's a good day to add doesn't necessarily mean it's a good day to roll. Right? So sometimes I'll wait it out a little bit. Here again, we are pushing over our delta theta, right? Then what did I do here? When did I do the roll here? I'm sure I talked about it at the time. Again, we don't have delta theta issues there. We're getting closer to expiration, so sometimes they become less prevalent. And then November 6th, I think we got a shot up, but we didn't quite hit an add point. So if I go here, yeah, so we shot up. So if we take off our, whoops, that's not what I meant to do. So if we take this off, we're almost double our delta theta guidelines. We're not quite high enough to add our last third yet, which would be 1200, I believe. So we just do a delta theta roll and rolled up to here. Right, so now we did that. So that's basically the history of that. And then, of course, where we are today. So if the market moves down, will you roll back the furthest butterfly? If the market moves down, according to Bearish Butterfly guidelines, we will pull off our 1180 butterflies and go back into 1/3 and manage it that way. So that's what we're going to do there. So that's it. That's December Bearish Butterfly. That's what we're going to do. Obviously, if the market goes up, the market comes down, we remove the 1180, we trade with 1/3 using the 1/3 entered guidelines. When we hit 21 days to expiration, if we're over over $5,000 profit, we're just going to exit. Then regular guidelines if the market goes up. So that's what we're doing there. Okay, so that's that. And the last thing we actually have on right now is a December V Condor, which also got no adjustments. So if we come into a December V Condor and just take a look at that, here is how we're currently positioned. Again, we were all the way up here at 1200, and now we're all the way back here at 1150. So 50-point move. right back into the center of the position. For some reason, the market just wants to stay here. And this is, if it stays here into December, that'll be the third month in a row it's basically stayed at the same point, which is very unusual, extremely unusual actually. If you go back and back trade this since 2002, you don't see this very often. So anyway, that is what's going on with that. So no issues there. We have entries on Wednesday. We have a November rock entry. Very likely with unless something changes between now and Wednesday and the market really flattens out, very likely we'll be pushing into a high volatility entry for November, which is perfectly fine. Regarding that, I have a question about the November rock. If it continues down from an M3R position, for November rock, if it continues down to an M3R position, what's the next step from there? If it continues down, we're just going to push into an M3 trade. You're going to basically ignore the upper butterflies. They're probably going to take a total loss and just going to continue to roll back. And then you'll be in a straight up, once the butterfly gets sufficiently away from the price action, you're just going to have a regular M3 going on there. So, the upper butterfly is just going to lose money. So it's just going to be a regular M3 from now on to the downside. As far as a rock trade for December, like I said, we're looking at probably a high volatility entry. I'm not sure, but I would suspect that. And then on Friday, we'll be looking at entering the V Condor for January, for January. We're looking at the Bearish Butterfly for January and the M3 trade. So that's what's going on there. And let's see what I have here. I do have a couple of questions, but my email for one of them. So let me pull this off here. I'm just going to be a minute. How has the M3? What's that, hon?
Yeah, I was going to quickly answer that.
Yeah, you can answer that. Okay, while I'm looking.
So you look, and I'm going to quickly pop into the website and take a peek for the M3 returns for this year.
Right, for the year. And Sherry can have all those numbers for you.
Right, on the if you go into the website under freebies and more, under the options trading for income weekly update, you'll see the returns for these trades. And for the M3 year-to-date 2015, it's 52.10%.
Okay, so about 52% for the year. And what I would expect in a decent year on an M3 trade is around 60. And that's, like I said, the 50% does not, whatever percent does not include November, nor December, obviously. So if we do well both of those months, then we'll probably be right around in that range. Okay. So another question is, so one of the questions I had is about an M3C trade. An M3C trade is something that we go over in APM squared, and it does not have anything to do. This is a trader that is just learning the regular M3. So the M3C trade is, we have varying different M3 trades. We have an M3, a regular M3. We have what we call an M3U, which is unhedged M3 without any Russell or IWM calls. We have an M3E, which deals with expiration week, using weekly expiration options. And of course, we have a M3C and a capital efficient M3, where we trade double the size for the same amount of planned capital. In other words, you can take an M3, you can trade it larger, and that's kind of what that revolves around. But that is not within the M3 program, so you're not going to find that there. It's in the APM squared program, where we do advanced M3 advanced M3 tactics and stuff like that. So the M3, the APM squared program is great for anybody who has kind of mastered the M3 and wants to take it a little bit further. Let's see. When I discuss a Rock Delta entry test, I say if the negative delta is close to 200. My question is how close to 200? 180 to 220. Okay, so when we're doing a rock test, generally we're going to be in a high volatility entry if we're at 180 delta. one of the things we have to remember is we want to set our negative delta to minus 180, right? So in order for me to go into a rock position to enter, if my delta starts at minus 180, I can't really add any upper butterflies usually, depending on where the price is. Sometimes I can't, because sometimes my upper butterflies are neutral delta or they're negative delta, and I can add in some butterflies. But essentially, if I go into rock position, I want to be able to add, do my lower butterflies and add 4 or 5, or at least 4 butterflies on my upper strikes, 40 points higher, and still maintain a delta of minus 180. If I can't do that, then I have to go with a high volatility entry. And then from there, this person just has a lot of specific questions on specific slides and stuff within the program, which actually is not really appropriate to answer here. That's more of a group coaching type of a thing, or a one-on-one session program. So Norm, if with that, we're going to have to just get deeper into that. Those are too specific. I'll take a look at them, but if it's something easy, then I can throw it out there. But the rest of that is going to be a little bit more specific with that. Let's see. Okay, actually the last one I can do. In my incremental adjustability capital control with small M3, with a small M3 position, I show an M3U, right? And he's just asking me, that looks like an unbalanced condor. And is this an M3C? No, that is not an M3C, that's an M3U. Okay. And do I recommend using a similar unbalanced butterfly trade for all small portfolios like mine? Not necessarily. You can do an M3 either way. You can do it with IWM calls. You have challenges with IWM calls. If you're doing IWM calls and you're doing, well, let me step back for a minute. One of the challenges you have as a small trader is chances are you're not very experienced. Otherwise, you'd probably be a larger trading with a lot more money, right? But if you're a newer trader, you shouldn't be trading with a lot of money. Or if you don't have a lot of money, then obviously you shouldn't be trading with a lot of money. So a lot of people end up trading with a $5,000 position. The thing about trading with a $5,000 position is you have more challenges. You can't get you can't have your adjustable your incremental adjustability. You are fighting day trading rules. If your account's under, I think, $20,000, then you can't make one trade and then back out of it the same day. Or if you make a mistake, you can't back out of it. I mean, there's just a lot of challenges that get thrown up in front of you as a small trader. Now, therefore, it's more complex to trade small than it is to trade large. That being said, it's beneficial to trade in the more complex manner because it gives you more options when you start trading large. But it's very challenging sometimes for somebody to go and do that. So if one of the challenges with trading a small M3 with IWM is the IWM itself. You're dealing with an IWM call, which has dividends that are paid, right? And if you have a call on IWM and you have, especially if it's in the money or at the money, the value comes off. The value of the dividend comes off the call, which basically means you're just paying out the dividend money and you don't get it back. If you owned IWM, you'd get a check back at the end of the year or whatever for that dividend that was paid out and the value that the stock lost. But if you're a long call option holder, you're essentially getting whacked for that amount of value, right? So that's one thing. And then the other thing is if you start doing verticals with IWM, you have the challenge of possibly being assigned any shorts that are in the money. Therefore, you need to be a little bit more aware of where your short strikes are and move them around a little bit more or be a little bit more dynamic and keep them out of the money. Unless, of course, you don't care if you get assigned. Again, if you're experienced and you get assigned, you don't really care. You're in the same position anyway. You've actually made money because you got the stock and you also got the time value that was left in that. And all you do is you just sell the stock and you sell the call again, right? So not a big deal, right? So from a positioning standpoint, it's not you get charged some fees and stuff in order to do that, but it's not a big deal as far as that goes. But for a new person, they get pretty freaked out when that happens. So anyway, you should know how to deal with that if you're doing that. If you want to avoid IWM, you just go into an M3U. Now an M3U is, if you go into an M3U, you can be completely in Russell, but still to get the incremental adjustability, you do need to do some weird, you get yourself into some weird positions as far as where the options are placed to maintain a T+0 line. Again, all a very good experience in learning how to trade long term, but not so good necessarily if you're new and you're just kind of confused about it. But if you really want to trade in M3U, then back trade it for a long time. If you have any specific questions, of course you can ask them here if they're specific and can be answered in a short amount of time. But if it requires extensive explanation, then we really need to do a session on that. Whether we do it in a group session setting or a one-on-one setting. And this other stuff here, like I said, it's just too long and detailed for this particular webinar here. All right, so any more? Okay, so Sherry, can you provide the link for that? I'm sure you will do that, where the returns are listed for the year. And I'm just going to answer this one more, and then we're going to wrap it up for the day because I have to get moving here. Did I say that to do the test with 4 or 5 butterflies? No, I did not say that do the test with 4 or 5 butterflies, the entry test for this is referring to our entry test for the rock. No, it's 10 butterflies. But what I'm saying is you do the test with 10 butterflies. If you're at 180 delta, you can check and see, or if you're more than 180 minus or more negative delta than minus 180, then you can check and see how many upper butterflies you can put in. Maybe you can roll your strikes 10 points back in your lower butterfly, or you can move things around a little bit. But you need to make sure that you can get 4 or 5 butterflies in at the upper strike level before you go into actual rock position. If you can't do that, generally I'm going to tend to stay in a high volatility entry. And like I said, because it's subjective. So in other words, sometimes you can do 10 butterflies and 5 butterflies and still be under 180 in rock position, even if your entry test is around 180. Sometimes you can't. Sometimes you need to be up around 220. It all depends on how the market skews are looking at any particular time. So hopefully that answers everything. I thank you, everybody. Lots of great questions today, and we will see you next week.